I had an experience of the day, which I'll do in 2 seconds. This is about fraud detection. I was buying some gas. There was a lot of sunlight on the gas meter. I couldn't quite read the little LCD screen, and what it was saying to me was press enter, and I didn't see that. And so I just had to change cards because my card was not working, right? I got a phone call. This is just for gas and, in Nevada or something. I got a phone call like, I don't know, an hour later from the fraud protection department about that card. Was I sure that card was okay?
Right.
Because I hadn't pushed enter. That was why.
Mm-hmm.
And I thought, well, this is at the bleeding edge of fraud detection. When you guys look around the world in terms of security, I kind of think of you guys as, if it's not PayPal, it's probably for sure you. You deal with this and are probably more effective at dealing with this, the security side of a new currency, more than anybody else in the world. How's that going to work going forward?
We like to think so,
Yeah.
but we benefit from the fact that we see so much of the consumer economy coming through a central switch. So in the United States, just as an example, we benefit as an intermediary because ultimately there are roughly 13,000 financial institutions in the United States that are connected to us, thousands of processors, partners, frankly, up and down the line, 8 million merchants all coming into the central switch. We are, as much as you think about us as a brand, and I bristle for a moment at the reference earlier to a credit card company because 70% of our transactions are touching the consumer's demand deposit account, not credit card. We benefit because we've created a platform over time based on trust that allows for these transactions to happen typically between parties that don't know each other, have it happen seamlessly. When there is a problem, because we see in the United States roughly 18% of the U.S. Consumer economy, consumers probably 65% of the U.S. GDP. So, we see a lot. And when things happen that are out of the ordinary, we literally score every transaction real time as it's coming through. And I got a text message yesterday from Chase about a transaction my wife made in Tahoe. And it was less than a minute after the transaction happened. It's pretty cool. Yeah. At the same time, while fraud rates globally are less than 10 basis points, and that seems small, it's over $1 billion. Yeah. It's a big deal. Yeah. But irrespective of the sums, we have a $3 trillion payment system and millions of merchants and tens of thousands of financial institutions and partners. It really is about trust. The consumer will partner and work with anyone up and down the line if they believe that he or she are being supported in the way that they need to. And the brand helps us do that. Same with Citi and PayPal and others coming. I think the technology is a huge enabler. But ultimately, if you don't have trust, if you don't have the ability to control the risks associated with the transaction, frankly, the rest of it just falls apart.
Yeah. I used to call it the trusted agent status, that if you don't have that status in the mind of the consumer, it doesn't matter what your plans are.
Absolutely.
And maintaining that and protecting that as time goes by. I'm sure that every time you guys look at a new program, that's part of the conversation, is this is going to damage my brand if this doesn't work out right? Or will it promote this trust, the trust part of that brand?
It is, and while banks have been vilified over the last year or two in the U.S., the fact is that every bit of research that we do suggests that the consumers trust their bank and the banking system. And even when you look at mobile around the globe, we monitor and participate, monitor a lot, participate in a smaller number of roughly 160 mobile payment-related pilots globally. Every one of them, at some level, includes a financial institution. Yeah. And there's a reason for that. It's not because banks are monolithic and they are the incumbent. It's because consumers trust the bank. That's where they want their funds to be. As much as mobile carriers, I think, are important partners in the form factor, the devices, irrespective of whether it's a virtual wallet on your PC, another device, or a phone, the consumer, frankly, our experience is they don't want to transact with their mobile account. They want to transact with their funds And those funds most typically are going to be sitting with some type of financial institution.
Now, to be just a little bit of a challenger here, I recognize Visa historically is banks.
Our primary client is a bank. That's right.
All right.
Well, and
We
you're
drew
right.
a picture on the wall. There'd be a lot of banks in that picture.
Up until a couple years ago, we were owned by
Exactly.
the banks. Let's be clear. And we view the banks to be a very important part of the payment system.
And one of the key questions I think as a panel we're facing right now is, here's this guy down. So are we going to continue to be of that nature, or will there be some new kind of currencies which are not backed by banks? And I know that one of the answers when I was talking to Jacobs about this was, well, there's all this regulatory apparatus in every country dealing with what is a commercial bank, and the carriers just don't want to even get near that part of Washington. They've got their hands full with the telecommunications guys. Right. So whether or not those regulatory schemes apply to every type of Farmville currency is a pretty interesting question. Your frequent flyer miles, right?
Right.
And S&H stamps from the 1960s. So clearly, we are using currencies that are not regulated already. They're not backed by banks. They still have brands of some kind. And are we saying as a group that there is an emergence of activity in that arena compared to before? Is that where the hot activity?
It's already happening, right?
Yeah.
It's a matter of, does that start to become some dominant force? But I mean, on the fringes, if you look at Farmville you brought up, or what he's talking about with phones, I mean, I don't know if you guys are aware of some of the stuff going on in Africa with carriers, but that virtual currency in the fringe areas where, based on lots of things, they're interested or willing, that's already happening. Does it start to become a dominant force is a good question.
Right.
But they're here, it's here today.
Yeah.
But this argument of, FTC meet the OCC, where the telco is a good one, because I think there likely will be, and there's going to be lots of things that happen before this shakes out, but I think there is this notion that there are some secure elements that financial services companies, as they evolve and partner differently, can bring, and it'll be a critical part of this equation. Because if you think about the flows of money around the world, there needs to be a way for government, regulator by regulator, to be able to understand where the money came from and where it's going. Now, that's not to say that there can't be an open API on the top that allows all sorts of fabulous development of virtual currencies, and that, in effect, that all those currencies need to be monetized. Sometimes they will be, sometimes they won't be. But I think that there's that, there are those foundational elements which are going to be part of this.
I'm really good at nightmare scenarios.
Okay.
And most of them come true. And I think it's because there are bad, so yesterday, there are bad people in the world. There are, and I'm sure you guys, in your quiet moments, think about these things too. So somebody once asked me, what's the best mobile business opportunity in the world? This is about 10 years ago. And I said, obviously, gambling in China on a handheld. It's a no-brainer. Gambling in China on a cell phone, right? That's the best business you could possibly be in. And so just kind of roll with that for a minute and think, well, let's say that you were in that business and you create your own currency. Now it's called China bucks, and or yuan, and then there's no regulation whatsoever about it because you're converting other currencies to buy those, just like Farmville. So then you go and you buy 1,000 of these China bucks, and then you can go gamble. Well, this is pretty popular worldwide, it turns out. And so everybody from around the world starts doing this. Now you've got $1 trillion in China bucks floating around, and they're being used secondarily for other transactions, and no one's watching. There's no one in control of this. How long does it take before somebody of ill intent starts making China bucks of their own, or make a list of all the bad things they could do that would create either hyperinflation in that world, or that would have blowback effects on real currencies, right? So at some point in the trillions, you're doing $6 trillion a night in Forex right now, roughly. At some point in that trillion world, you can get there.
Yeah. Oh.
So I'm kind of interested. Do you think that could happen?
It's already happening.
Yeah.
In a lot of virtual economies, it already happens. I mean, there's a very popular game that millions of people play called World of Warcraft. Some of you guys may have heard of this game,
Everyone
but basically spend hours and hours of their time and hundreds of thousands of their dollars to basically advance through this virtual world. And very savvy participants have learned that they can outsource what's called gold farming in these games to low-wage workers in China who will sit there literally in factories and just repetitively do the same thing over and over and over under a different identity to accrue currency in that world. and it's basically just causing an inflationary problem in the marketplace, making things worth less than they were before. So it's already happening, and happens, in basically any large virtual economy that's already out there today.
So that'd be a good run-up to what we're talking about. That's kind of a good proof of concept of a larger scale disaster that could happen in real monies.
Sure.
In real currencies. I want to, Bill, just for a second, I want to come back to that thing that, so is there a need for an interchange here? Is there a need for someone, is there a need for someone to act as an honest broker with all of these new currencies showing up? And do you get to decide which ones are trust-based and which ones are not trustworthy for a customer? And how does that work?
Well, I think ultimately the consumer decides what he or she trusts. I think we don't necessarily think of ourselves as standing in the way of that, because a lot of these accounts get funded by a transaction that comes through our network. You create a stored value that gets translated into a different currency, and then the consumer runs with it. Scott and I have a huge.
You and I talked on the phone about Forex exchange rates the other day. So I want to introduce two ideas here. One is, people used Visa cards all the time 2 years ago when they would travel for foreign exchange rates, because it was such a better deal usually than going to your hotel or to the local guy, whoever that was. And you guys have raised your rates a little bit since that time, I understand from you. My understanding from the street is people saw that happen. Now there's a little more looking around. How else can I get my money exchanged? Right. I'm not going to automatically go to the ATM machine and do that. With that thought, and the thought of your usual margin requirements for a normal US-based transaction at Amazon or wherever, compared to this need for smaller margins in an e-commerce marketplace where I'm only spending 10 cents for micropayments. Right. Can you put those together and give us the future from Visa's perspective?
Well, there's no question the needs of the consumer and the needs for different environments online for smaller transactions are unique relative to an Amazon transaction or someone booking an airline transaction online. You're right, particularly in the case of our company and MasterCard. The business models have altered a little bit over the last few years as we become more profit-oriented, as we both companies went public. In certain instances, we had to look around and say, where are we providing services? Where are we adding those value to the consumer? And we decided that on some international transactions that there was an opportunity to, frankly, increase our margins, respond to investors as real companies do, but keep in mind, when you look at the consumer's other options of how they can transact, either in the real world or in the virtual world internationally, we're still, in our opinion, the way that we benchmark what we do, among the best options. PayPal is a great one. In many ways, we look at them because they can make certain transactions happen cross-border that can't happen in our
Are you looking at future products that would be lower cost to you, that would allow you to have different margin settings, and that would be more based on e-commerce?
Yeah, I think when you look at smaller transactions that occur, microtransactions, we absolutely see that as a growth area. We've got a business that we've launched in Australia in partnership with Microsoft, where it's a different brand, and it's all about virtual stored value.
What's the brand?
It's called PayClick.
Okay.
So, and it's essentially a virtual stored value account, and it allows consumers to more efficiently make ringtone transactions or operate in different environments. And if a merchant or an online environment wants to plug into that and have a network-based currency versus a proprietary currency, it works.
Sounds kind of like PayPal, doesn't it?
Yeah, in some ways. Yeah, but the thing that I'm listening to you talk about, there's a lot of elements, whether it's Visa or somebody else, that can govern where the cash is coming in and out of the system. But the fact is, what he was relating to, one of the fastest growing places out there right now is digital goods. So what is digital goods? There's no shipping. There's no, it's a virtual thing, and there's money that's going to go in and out of the system. But once it's in there, and how people decide to trade, and he said it's up to the consumer ultimately. I believe that too. They will decide, okay, this is not good. Yeah. But trying to govern and manage how they decide to trade inside the digital world, I don't believe governments or anybody else can keep up